In day trading, swing trading, and investing, you'll hear patterns, and it is very true that you need to learn to recognize the best patterns. Today, I've got 3 of the most simple but best patterns to look for as a day trader. Hey everyone, lead trainer with StocksToTrade, Tim Bohen here. Be sure to subscribe to our channel for multiple videos a week. We release a bunch of great information, and then also hit that alert bell to be notified the instant a new video hits. Extra important because we go live every single week, breaking down the stock of the day, potential trades for the next day, bunch of great live Q&A, so be sure to hit that alert bell. So, I've got 3 patterns for you today. May get a little heavy in jargon today, but if you hear me talking buzzwordy and jargon, remember we've got an entire video library. Check out those other videos where I go into terminology, go in depth in some of these concepts. So if you hear a term you don't recognize, check out the rest of the videos. So, gonna start right out with one of the best patterns I love as a day trader early in the day. And there's a lot of different terms for this, but my favorite term is it's called the dip and rip. Okay, it's kind of a cool name, but let me lay out the setup, the entry, and the idea behind it. So, what you can see with this stock here, the gray portion of the screen is pre-market, okay? So this is from 4 a.m. Eastern up until 9:30 a.m. Eastern. That is pre-market. The darker gray period is after the market open, after 9:30 Eastern. So typically for new traders, I recommend not trading in pre-market. You're getting ready, you're planning, deciding what you're gonna do for that day. So you can see SBOT, this ticker, was up big at 8 a.m. It had some news. It was up 30–40% in pre-market. Always dangerous to trade in pre-market, and the great thing about the dip and rip pattern is you can wait until after the market open for this trade to set up. Now, why is it called the dip and rip? Notice right before the market open, it spikes to a new high a day, 225, which at that point is probably up 40% on the day. Then it dips hard into the market open from 225 down to $2. I mean, 25 cents a share on a $2 stock, that's a big move. The beauty of this pattern is you're waiting for strength. You're waiting for that reclaim of the HOD, we call it HOD, high of the day. So it dips to 2, rips back to 225 on high volume. That's your entry. In this particular pattern, you would be buying that high of day break, and then you would be risking the fail of the level that it bounced off of. So the bounce level is your risk level. In this situation, you'd be risking 20–25 cents a share to potentially make 50–75 cents, maybe $1 a share. You can see this screenshot was taken at about 10 a.m. The stock spiked to 260. Later that day, it ended up going to 3. So there is a 3-to-1 risk to reward, a perfect setup, and a sniper-like setup. You wait for that dip, that rip, with stop on the fail area. One of the best and most consistent patterns, in my opinion. The next one I want to talk about is a late day pattern. Really, as a newer trader, focus on early in the day and late in the day. This is one that spiked midday, roughly 11:30 a.m., and then consolidates at or around VWAP hold. So this is our 2 p.m. VWAP hold high of day setup. A lot of jargon, remember the video library. But notice how it spikes early, and maybe you missed this spike, and most of us probably did, because it kind of happened midday. Consolidates at or around VWAP, that's the yellow-orangish line. Then at 2 p.m., it makes a new high a day on high volume. That's your entry. So remember, we want clearly defined entries and exits. Your entry is that new high a day from the morning's level. Your stop is a VWAP fail. The idea behind the 2 p.m. VWAP hold high a day setup, long term, is you're stopping out on a fail on VWAP. So you're, in theory on this trade, you'd be buying at $1.60, $1.60. You'd be stopping out on $1.40. You're risking 20 cents a share. Stock proceeds to go to $2.70, over $1 a share. Now, you're probably not going to sell exactly at the top, but you can see how there's clearly defined risk to reward. Risking 20 cents to make 60, 80, or $1 a share. That is how you trade for real, not just throwing stuff at the wall hoping it sticks. Next one is great for swing trades as well as momentum trades. This is what we call the week open red to green. So this is a stock that spiked big the day before, okay? One of the reasons I want you running scans every day is to look for those big gainers the day before. So now you're looking at this the night before, maybe it's 8 p.m., markets are closed, you can't trade, you're making your plan for the next day. So this is a stock that ran big on news, closed near the high of the day, then the next day, you're looking for this stock to prove itself, to show you that it can continue to run. And the key of that is that red open. So the stock opens before or below the previous day's close. So the stock is red on the day. Then, soon after the open, ideally 9:45, 10 a.m.-ish, it goes green on the day. That shows you that the buyers are showing up for the second day in a row. So it gives you clear entries, just like all of these setups. That's what I love about them. KISS, keep it simple, stupid, okay? Simple setups work the best. You buy that green move, you risk a fail. So if the stock goes back red on the day, that's telling you that the idea is busted, the trade is busted, you stop out for small losses. That's part of day trading. You have to be okay with small losses. In this scenario, you'd be risking 20, 25 cents a share on a $3 stock. That's a manageable loss. Small losses, that's the key. And then looking to maximize those gains. As it goes green on the day at 375, it proceeds to spike to 484 and actually did continue higher even later in the day. So you're risking, just like all these setups, you're risking small, 20, 25 cents a share to make 80 or $1 plus a share. So check out the dip and rip. Check out the VWAP hold high a day, and check out the week open red to green. I think those are the three best patterns you should be focusing on and dialing in to find consistency. So drop me a comment below. Have you traded any of these? Three of my favorite by far setups. Drop me a comment below. Have you traded them? And let me know how you've done on them. Thanks for watching our video. Be sure to comment below with any trading related question. We love answering your questions. Also, like and share with your friends, and be sure to subscribe to be notified as soon as our next video hits. And if you're looking to expand your trading knowledge, don't forget to check out all of our other videos, and be sure to click the trial below. Check out StocksToTrade. I think it is one of the best, most rapidly advancing softwares out there. Be sure to check out our trial.